Guys, big news day today. We have Disney earnings, we have a super microcomputer, we have HIMSS, we have PPI, and we have the super investor buy and sells. First off, super microcomputer, Mo, this bad boy might get delisted. Look at it, down another 9%. For those of you who don't remember, I'm quite sure, Mo, that we have some video where everybody calls us stupid for saying this company is not worth it.
Yeah.
I'm sure. I don't even know if we did a video on that. We do so many videos. It is down. All-time high of 123 just earlier this year, March 8th. And now there's talk of delisting. So Mo, why are they being delisted?
So they don't think they can file their 10K in a timely manner?
Yeah.
Interesting.
Yeah, so Ernst & Young.
This is the same company that, remember they leaked their earnings early, like 10,
I don't remember
12
that.
days ago?
Was it really?
Yeah. Before you go on, can I read to you the last like 12 market days?
Yeah.
Down 32%, down 12%, down 10%, up a 0.5%, up another 0.5%, down 18%, up 12%, down 3%, down 5%, down 6%, down 6%, down 9% today. That is a rough go for the last 10, 12 market days.
Well, the last 7 months, 8 months have been pretty
abusive.
brutal as well. A high of 123, Mo.
Jeez.
It is now down to $18 a share. That is a fall of 85% in a matter of 7 or 8 months.
That's crazy.
Guys, you know, this is a great learning lesson, not because we saw the flaws, and we did not. But if something doesn't make sense, it's okay to pass on it. If something isn't making sense, it's okay to pass. Now, they're NVIDIA's second or third largest customer or something like that?
Something like that, exactly.
Does that mean that NVIDIA is going to have problems too? I don't know.
It doesn't, just because they're being delisted doesn't mean that they're pulling everything out of it.
Right.
Because NVIDIA is perfectly fine today. I was interested to see like, oh man, did NVIDIA take a hit? It did not.
Oh, really?
Yeah.
So NVIDIA is fine, like as in
fine.
it's up?
As in it's just neutral today.
Okay.
Nothing really going on.
So, you know, if you had SMCI stock, I don't know what to tell you besides when your auditors quit because of questions, you kind of got a problem right there. You can't file your, where is this thing going? I don't know. Could be a massive turnaround. This is one of those too hard piles I move on from. Yeah, I know it sounds interesting because it's down 85%, but is that really what you want to be looking at here?
Right.
What I believe in doing is, for myself, finding good companies that have a temporary problem and have potential, which leads us
to
company number 2. Disney reported earnings. Revenue of $22.6 billion, beating $22.4 billion. EPS of $1.14, beating $1.10. Guys, I own Disney stock. Don't ever own a company because somebody on the internet has it. It is up 7% today. Everybody keeps telling me Disney's dead. Everybody keeps telling me go woke, go broke. My thesis on Disney is margins.
Yeah.
You look at the margins here.
What are they at now?
Their margin in the last 12 months is 5.3%. Their last 5-year average is 2.6%. But before COVID, it was 12 to 15%. Mm-hmm. This is like the same thesis I have on Southwest Airlines.
Yeah.
I'm looking at saying, guys, if they can just get back to 8 or 10% margins, this company's worth a lot more money. And you look at their revenue, Mo. Look at this revenue. Record revenue. Before COVID, their previous high was 70 billion. The last 12 months, they've done $90 billion in revenue, but with lower profit.
Yeah,
and they're starting to make some more money off their streaming, off their Hulu, off their Disney Plus, etc. So these are a lot of positives. And this quarter was a positive in terms of beating. What did they do last? Do you know what they did last quarter in terms of profit? And we can look at it here quarterly. Per share quarterly, the same quarter last year would have been September. They did 14 cents per share.
Okay.
And now they're at $1.14 per share.
Yeah. And in net income in 2023, they did $2.35 billion in profit, 4.78 in the last 12 months. So basically double. It's getting better.
Things are getting better.
Getting better.
These are the things. The reason why I was attracted to Disney is I thought to myself, okay, here's Disney. This is a company that's going nowhere.
No.
I look at this company thinking to myself, how do you replace Disney?
You can't.
It's going to be very, very difficult. So when they have a temporary problem, what I perceive to be a temporary problem, remember, there's going to be a lot of stories out there about Disney. Oh, here's why they suck. Here's why they're every company that's down, there's going to be 1,000 stories about why they're down. Every company that's up, there's going to be 1,000 stories that they're up because news follows the stock price. I look at this and said, nothing's better than buying a great company because of what I perceive to be a temporary problem.
Yeah, and to me, you compared this to Southwest. Think about Southwest. They were profitable for 32 straight years.
I think it was 48 years.
It took a pandemic to shutting down. Same thing with Disney. They were a great company. It was that really hit them hard.
Yeah, and these streaming wars, we talked about that in streaming. We're like, guys, there's going to have to be a lot of consolidation here because there's only so many people who can do well.
Yeah.
I think Netflix is going to be around for a long time. Disney's got the what's it called? The content.
Plus, they have the
Mighty Ducks
power where they can just.
Oh, they can say Mighty Ducks.
They have the Mighty Ducks too. Yeah.
A great trilogy.
It is. Really
Would we
good.
not agree that the Mighty Ducks is a great trilogy?
I agree. That's why I started playing hockey.
Come on.
I swear to God, I watched D2 when I was a kid, and I was like, yeah, I got to play hockey. This is sweet.
So, what was the best one for you? Was it D2?
Yeah.
Really?
Yeah, it was my favorite one.
And that's the one that's the one where they played overseas
In
for
Iceland.
Iceland?
Yeah.
Got it. And D3 was the Olympic team in the US? No, where was D3? That was one with Keenan Thompson from SNL, or was that D2?
D2 was with him.
No.
Yeah, because he had the knuckle puck.
Oh.
Knuckle puck time.
We got to watch these movies again. I still use the joke.
Great.
So D2, when they played in Iceland, there's that joke where he comes back with the slicked hair and some kid says, "Did you lose a bet?" I use that joke all the time today. Whenever I see somebody wearing something ridiculous or doing something stupid, I go, "Would you lose a bet?"
That's from?
That's what that is. You've heard me say that, right?
Yeah.
I got that from Mighty Ducks.
Yeah, it's great.
It's a great movie.
Gordon Bombay. Gunnar Stahl.
What's his name? Joshua. What's his name? Who's the main character kid?
Charlie Conway?
Yeah, Charlie Conway, but what's his real name?
I have no idea.
Josh Jackson?
I don't know.
Josh Jackson.
Okay.
And he's like all philosophical, and Gordon, he's like, oh yeah, I missed it all the way. He's like, I hit the post, and it went. He's like, well, yeah, but 1/4 inch to the left, and it would have missed completely. And he's like, oh, I never thought of it that way. I was like, this 12-year-old kid is providing this, stoic kind of approach to life.
To this insight, yeah.
So, anyways, guys, I look at Disney, and I'm a believer in that. And what I'm trying to teach here is that process of how to think. Hims is down 13% today.
Hims was a big one.
14 now.
This was if I remember correctly, it was a SPAC.
Oh, was it really?
When it was crazy with SPACs.
Was it really?
Alex Rodriguez was involved in this. I think it was.
It actually looks like it because look at this chart right here. It's a very flat chart at $10 a share.
Yeah, I'm pretty sure this was.
Yeah, you might be right. All-time high very recently, Mo. 11.13 yesterday, $30.43, and now they're down to $23. Wow, they were at $30 yesterday, Mo.
Wow. Sheesh.
52-week low, exactly a year ago of $7.40.
Wow.
Let's see what Hims makes.
It's like hair stuff, right?
Like how much?
Oh.
Net income, they actually have positive net income in the last year.
Good growth.
Let's see their free cash flow, though. Is the free cash flow legit?
It's the 8 pillars. I
Oh,
assume
yeah,
it's
not
massive.
bad. They had free cash flow last year.
Look at the shares outstanding, up 560%.
Oh, boy.
Yikes.
Guys, this is called dilution.
To the extreme.
To the massive extreme. So for me, I don't have to look at any more. Go ahead.
They had 34 million shares outstanding in 2019. Today, have 216 million.
Guys, if a company goes increase their number of shares by 560%, that means their shares go up by 6.6 times.
They don't like you.
Am I right? Yes. 6.6 times, which means the business gets 5 times better, you've lost. Because you're now splitting the shares up by 6.6 more people, but your revenue and profit are up 5x. You've lost out. That is the danger of dilution. That is the absolute danger of dilution. All right, PPI report came in. Now, PPI versus CPI, for those of you who are wondering, CPI is what the consumers pay and the increase in those costs. PPI is what the producers, the makers of goods and services pay. Came in higher than expected, 2.4% versus 2.3%. So a little bit higher. Producer price index is probably going to be a leading indicator for CPI because as the producers pay more, they transfer those costs onto the consumer and the consumer pays more later. So that's something to really consider here. What's the market? I don't know what the market is doing today. What's the market doing right now?
Question. I don't know.
So I don't know what they reacted to, but remember, if prices go up, it's not an argument for interest rates going up. What was that?
Dead flat market.
Is it really?
Yeah, the Nasdaq's down 0.09. Dow is up 0.02. S&P is down 0.06.
Oh yeah, it's
like
flat as can be.
flat. Wow.
Yeah. So guys, Hims and Hers Health. This is already a company for myself. Like I know you see the stock go up, down, all that stuff. Remember, these fundamentals matter. This company barely makes cash. It's diluting its shareholders. And this is a tough one. I want you to have that ability. I want you to be able to sit there and look at the investments the way we do by saying, hey, when I buy stock, I'm buying a piece of business. So if you're new to this channel, just remember that. And if you don't understand that yet, stick around. Subscribe to the channel, guys. You're going to learn a ton. And it's not about mimicking what we do. It's about applying the fundamentals of what we believe to the things that make sense to you. These are tried and true. There's a reason why one of Buffett and Munger's friends, Monish Pabrai, did an interview with us. He said, yeah, you guys are legit. You know what you're doing. Have we made mistakes? Absolutely. But my biggest mistakes have been mistakes of omission. Well, one of commission, a big one of commission. But I look at the companies I own. I'm like, I like these. Like every single company I own, I'm like, yes. If the market shut down for 20 years, I'd be happy I own these companies. I'd be actually enthused to have it close for 20 years. Let them grow for 20 years. Let me not worry about the day-to-day price.
Yeah.
That's what I'm trying to get. So guys, thank you very much for watching the video. Subscribe to the channel. I'll see you next time. Thank you for your time.